What's up, Sphereheads? Get ready for a rapid-fire download of the news that's shaping our world, starting now. First up, we're breaking down critical new findings in breast cancer treatment, where researchers are exploring the impact of neoadjuvant palbociclib plus endocrine therapy in operable HR plus breast cancer. We've got the full details on whether this combination truly makes a difference for patients. Next, we're tackling the big question in marketing. Can AI really scale personalization all by itself? We're diving into the challenges of disconnected content supply chains and what it takes to truly deliver tailored experiences to every customer, every time. This is crucial for brands looking to connect with you on a deeper level. Now, let's talk money. We're seeing some major moves on Wall Street as institutional investors like Radnor Capital Management, LLC, are adjusting their stakes in software giant Adobe Inc. We'll break down what these acquisitions mean for Adobe's stock and the broader tech market. And speaking of Adobe, we've got another investor spotlight on Hoffman Capital Management, LLC, and their recent acquisition of Adobe Inc. Shares. Is this a sign of confidence, or are there other opportunities on the horizon? Stick around to find out. Don't forget to like, subscribe, and hit that bell so you never miss an update. New hope or no-go? The Palbociclib breast cancer puzzle. Could adding a powerful drug like Palbociclib to standard endocrine therapy be the next big step in treating operable hormone receptor-positive breast cancer? That's the multi-million-dollar question researchers have been investigating in a major Phase 3 trial. The study focused on patients with operable HR-positive, HER2-negative breast cancer, aiming to see if this combination therapy could significantly improve preoperative endocrine prognostic index, or PEPI, scores compared to endocrine therapy alone. The results are in, and they might surprise you. This trial, involving patients with operable HR-positive, HER2-negative breast cancer, looked at whether adding Palbociclib, brand name Ibrance, to neoadjuvant endocrine therapy would provide a significant boost over endocrine therapy plus a placebo. The primary goal was to measure improvements in PEPI scores, a key indicator of how well a treatment is working before surgery. While the Palbociclib group saw 15.2% of patients achieve low PEPI scores, the placebo group had 13.3%, a difference that, while seemingly small, did not reach statistical significance. The study authors, including lead investigator Dr. Takayuki Yuno, noted that the combination therapy also didn't show significant improvements in other crucial secondary endpoints, like clinical response rate, reduction in Ki-67 levels, pathological complete response, or breast-conserving rates. This is a critical piece of information for oncologists and patients alike, as Palbociclib is already an established treatment for advanced or metastatic breast cancer. The oncology community is buzzing with reactions, with many highlighting the importance of rigorous clinical trials to validate new treatment approaches. While this specific combination didn't hit the mark for improving PEPI scores in this trial, the data provides valuable insights into treatment strategies for HR plus breast cancer. The focus now shifts to understanding the broader implications and potential future research directions. Don't go anywhere, because the story on cancer treatment just got more complex. And next, we're asking if AI can truly deliver on the promise of hyperpersonalization all on its own. AI's personalization paradox: can machines go it alone? In today's digital world, everyone expects content tailored just for them. We're talking about that feeling when a brand just gets you, anticipating your needs and serving up exactly what you want, right when you want it. But here's the kicker. While 71% of consumers say this level of personalization is critical, only a third actually believe brands are delivering. So, where's the disconnect? It turns out the biggest hurdle isn't a lack of AI smarts, but a bottleneck in the content supply chain. Think about it. AI can churn out amazing assets at lightning speed, but getting those assets approved, localized, and delivered to the right person at the right time still relies heavily on human processes. Without a streamlined, cloud-powered system, even the most advanced AI can end up creating more work and confusion. We're talking about campaigns that used to need dozens of assets now requiring thousands, and enterprise content is projected to explode to 155 exabytes by 2026. Experts like Amit Ahuja at Adobe and Helen Wallace at Deloitte Digital stress that it's not just about speed, but about creating truly engaging, individual-level content. Without coordination, teams can waste up to half their time on low-value tasks like resizing images, and a staggering 50–70% of content produced might never even be used because it can't be found. The consensus from industry leaders like IBM and AWS is clear. True personalization at scale requires re-engineering the entire content supply chain. This means moving to the cloud for an integrated workflow, leveraging AI for creation, using cloud-based digital asset management, DAM, for accessibility, automating delivery to channels, and employing cloud analytics for real-time insights. As Ann Culver from Oz puts it, you can't scale personalization on dial-up. The cloud is essential for the agility and intelligence needed. The key takeaway? You need both cutting-edge technology and robust people-centric change management to make it happen. This is a game changer for how brands connect with you. But before we dive into the next story, have you ever wondered what big players on Wall Street are doing with their investments? We're about to find out. Wall Street Watch: Radnor Capital Management buys big into Adobe. Big news from the financial markets as institutional investors are making significant plays. Radnor Capital Management, LLC, has just boosted its stake in the software giant Adobe Inc. by a substantial 36% during the second quarter. This move adds an additional 1,700 shares to their portfolio, bringing their total holdings to 6,427 shares, now valued at a cool $2,486,000. This isn't just a minor adjustment. It's a clear signal of confidence from Radnor Capital. They join a host of other institutional investors, including DLK Investment Management LLC, Pines Wealth Management LLC, Sunpoint LLC, and Taylor Hoffman Capital Management LLC, who have also recently increased their positions in Adobe. In total, institutional investors and hedge funds now own a commanding 81.79% of Adobe's stock, highlighting its significant draw in the investment community. Adobe's stock, trading around $352.73 recently, has a market capitalization of nearly $150 billion, and analysts are projecting strong earnings for the current fiscal year, with an average target price around $435.63, according to Microsoft Spherecom. The market is definitely taking notice, with Adobe's recent quarterly earnings beating analyst expectations and showing robust year-over-year revenue growth. This strategic acquisition by Radnor Capital Management is fueling discussions about Adobe's future performance and its position in the competitive software landscape. Analysts are weighing in, with a mix of buy, hold, and sell ratings, but the overall sentiment leans positive, with many upgrading their price targets. And the investment activity around Adobe doesn't stop there. We've got another major player making a move that you'll want to hear about next. Adobe stock alert: Taylor Hoffman Capital Management ups its stake. Get ready for another significant financial maneuver. Taylor Hoffman Capital Management, LLC, has also been busy, increasing its holdings in Adobe Inc. by a notable 7.3% in the second quarter. This strategic acquisition involved an additional 890 shares, bringing their total investment to 13,045 shares, now valued at approximately $5,047,000. This positions Adobe as the 22nd largest holding in Taylor Hoffman Capital Management's portfolio, representing 1.7% of their total assets. This latest move by Taylor Hoffman Capital Management, LLC, adds to the ongoing investor interest in Adobe. It follows similar recent acquisitions by other funds, including Siemens Fonds Invest GmbH, 1248 Management LLC, Barnes Denig Private Wealth Management LLC, Swan Capital LLC, and Copia Wealth Management. With institutional investors collectively holding over 81% of Adobe's stock, these investments underscore the company's strong presence in the market. Adobe's financial performance, including recent earnings that surpassed analyst expectations and a healthy revenue growth of 10.7% year-over-year, continues to attract attention. The stock's performance, with a 50-day moving average around $356.13 and a 52-week high of $557.90, is being closely watched by investors. Market analysts are actively analyzing these developments, with recent reports from Robert W. Baird, D.A. Davidson, Bank of America, Redburn Partners, and TD Cowen offering diverse perspectives. While ratings vary, the average rating for Adobe stands at a moderate buy, with an average price target of $435.63, according to Microsoft Sphere data. These continued acquisitions by major investment firms signal a strong belief in Adobe's long-term value and potential. That's all the market moves for now, but we've got a quick recap of all today's top stories coming up right after this. And that's a wrap on today's essential updates. We covered groundbreaking breast cancer research showing neoadjuvant Palbociclib plus endocrine therapy didn't improve PEPI scores. We explored how AI needs more than just algorithms to truly scale personalization, highlighting the crucial role of content supply chains. We saw Radnor Capital Management, LLC, significantly increase its holdings in Adobe Inc., signaling strong investor confidence. And we reported on Taylor Hoffman Capital Management, LLC, also boosting its stake in Adobe Inc. Don't miss out on the next big story. Hit that like button, subscribe to Microsoft Sphere for all your tech and medical news, and ring the notification bell so you're always in the know. Follow us on all our socials for more exclusive content. We'll see you in the next video.